Good Monday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dmitry Pargamonik. Dima, you there? We have him coming in. Here he is. How you doing,
Yeah.
D?
Hey, well, how are you?
Good. You want to start with the
Good
disclaimer?
morning. Yep. Good morning, everyone. Before we get started, keep in mind Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. There's the disclaimer.
Excellent.
And let me share my screen. While I'm doing this, if you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, the analytics. If you have a question, put it into that live chat on YouTube. Will is watching it. He'll read it back to me. And to give you guys a couple minutes to put those questions in, we'll start out looking at the pre-market report, seeing if we could get some insights, what's going on in pre-market hours, and then we'll move on to the questions. Okay, so pre-market report, these are stocks trading in pre-market hours. Like we said, up top, we have this calendar view. This does allow you to go back in time if you wish to see what happened in a pre-market on a historical date. We do, and you can do that by clicking on this calendar up here. We do show from a top level the trailing week just to see if we could spot any type of trends. So far today, we're over here, January 29th, and this is what's going on. We have 454 stocks trading higher in the pre-market, 292 stocks trading lower. As far as volume goes, we have 161 million shares trading on up volume versus 53.8 million on down volume. And if we convert that volume to dollar value, we have $2.2 billion worth of stock trading higher, $709 million worth of stock trading lower. So the takeaway from there is that so far it looks like traders in the pre-market hours are leaning more towards the bullish side or bullish sentiment. Let's look at it from a couple more perspectives, then we'll move on to the questions. So I'm going to come down here. And now we have another breakdown of the data, and this shows us the stock symbols trading in the pre-market hours along with the price change, volume, market cap, and so forth. The three lists we have are the most active stocks in the pre-market, our biggest percentage gainers, and our biggest percentage decliners. I see we have 54 stocks that made our largest gainers list, 39 on our biggest decliners list. And that also indicates a little bit of a bullish lean in a pre-market hour trading. Now, to make this list, we do set thresholds for liquidity, volume, price changes, because things in the pre-market hours could be very liquid or low volume. However, any stock that meets that threshold and trades on the major U.S. exchange could make it onto this list. It could be an ETF. It could be a leveraged products. It could be a inverse product, a closed-end fund, a preferred. And to narrow down to a small group of stocks, we could use the filters above this list. So these are the filters. If you have a watch list, you could use this filter. And if you wish just to screen stocks for, that you've put into your watch list into these three different lists, you can do that. We're going to use this filter here, an ETF in our example. And when you click on it, you get a drop-down menu to select from. And we're going to, of different ETFs. We're going to select this one, SPY. That's the S&P 500 ETF. And when you do that, you could see that the lists below get filtered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. And here we have 10 stocks that met the threshold for our largest gainers, 3 on our big decliners. And that also indicates so far every way we looked at it, it's not the only 3, but every way we looked at it shows that the trading in the pre-market hours has some bullish lean or bullish bias. So we give it a couple minutes. Will, if you have questions, I'll take the questions.
Nothing's popped up yet, D.
Okay. So let's go to SPY while we wait. That is my default symbol. And last week we were discussing a report in SPY under options, and this is the activity report. And a quick reminder, what this is kind of a analysis of the options volume in SPY and breaking it down to different categories or slicing it and dicing it to get more insights. What's going on with the options volume, options trading. And we talked about the breakdown between the way these options trade between single leg, multi-leg, contingent, calls and puts, electronic floor trade. And we went over these columns last week. You can go back and watch those videos. But what I'm going to do is just kind of keep drilling down into this report to see how you can use it to get further insights. And we stopped over here on this report. We talked about these columns here. And just to recap, over here, we have the different expirations for SPY. And as you could see here, SPY has a lot of options expirations. It's one of the busiest traded securities out there, used for a lot of purposes, some hedging, some strategies. And when we look at the data to the right of it, that's the data related to each expiration. So this way we have it organized in a table. We could quickly see what's going on in that expiration and then on relative terms against other expirations. So now that we have the expirations here, they're organized by the shortest dated to the longest dated options, right? So starting this one expired. We're not open yet, but this one expired on Friday. And this will start updating after the market, today, after we open up and, 15 minutes after we start updating the data. We talked about the events. So if we find any events related to that expiration that could be material for the options, if we detect it, we'll list it here. So here's like a dividend, March 15th. You could see there that's important, obviously, because dividends are one of the inputs in the options pricing model. And depending on your strategy or the options you own, some could be a candidate for early exercise if you have deep into money calls. So things like that will put into that column as a reminder or just notice that we detected something, keep it in mind. So this next column over here is the at the money implied volatility for that expiration. Okay, so you could see here that the at the money implied volatility is not the same, for all the expirations going across, right? So it's not like there's a 12 vol and it applies to every option. The options don't work that way. There are skews in there. And there are skews within the expiration, there are skews from one expiration to the other. And here we're looking at a term structure. This is how the implied volatility looks like, changes as we go out further in time, right? And we could see here that it's an upward sloping term structure. Now that's how far we got last week as far as just this column alone. We didn't go deeper into it. And we did talk about the change, right? So this is the change on the day of the at the money implied volatility. So you could kind of get a sense of what's going on. And it looks like, to me, if I was just eyeballing it, that the near term, shorter dated or intermediate dated options, the implied volatility ticked lower a little bit, while the longer dated options ticked up a little bit. So the term structure, the whole thing didn't shift up or down. The slope kind of steepened, right? That's what it looks like. Like some of it went down, some of it went up. So it looks like that the slope, started to increase as we get further and further out, right? So that's just eyeballing it from, the changes. Now, what if we wanted to get more details about a specific expiration? And when you see these little when the data point looks blue, that means that you could click on it and it'll take you to more information, either another page or to more information. So let's just come out. Maybe I'm going to just find something that trades a little more. So here's an expiration February 2nd, traded 442,000 contracts. I'm going to click on this 12. And that was the current IV, right? So that was the last at the money IV measurement we got, was 12 by the end of the day. And now we got a couple more charts here showing us a history, because that's the last one. But how did this specific expiration, February 2nd, what was the journey of it, before it got to 12? Was it much lower? Was it much higher? Did it trend? Did it just stay around here and bounce around? How does it trade? Because one of the questions as a trader is, well, how does a certain security behave or trade? What are the ranges? What are the standard deviations? What are highs, low, right? That's kind of questions we like to know. And this gives us two graphs. And the one on the left, this shows us how the at the money IV traded or behaved throughout the day. So this one is just on the one day, the last day. So the most current day, we could see from 9:30, this red line going all the way across was where the at the money implied volatility closed the previous day as a reference. And then this green line shows us at different times of the day. We're taking snapshots here. So this might be like a 5-minute chart, right? But you could see here from 9:30 to 4 o'clock, this is how the at the money implied volatility behaved. And while we're looking at it, we could see that, that it bounced around. It didn't really, just trend all day one way. It looks like in the morning, the implied volatility all the way up to 10:30, right, kept decreasing down to almost from this marker 11.9 down to 11.5. And then after that, it started to kind of trend higher and continued on that trend, but bouncing around, right? It's not like a straight line. You could see here that it bounces around, right? So it moves in a choppy fashion, not but it can trend. And it started out down on the day, and it seems like it was down almost till noon or a little bit after, and then it kind of crossed and ended up on the day. So that's how the implied volatility looked like on Friday, and it gives us a visual of how it trades, right? Because you'd want to know, well, how does something behave or trades? Is it choppy? Is it like very stable and just kind of bounces around at some kind of equilibrium, inertia? So here we could see that could move around quite a bit. And then what about how the implied at the money IVs behaved beyond just one day? What if we wanted to see since the inception of this option? So of course, when we're talking about options, whatever one I clicked, what did I click on? The February 2nd. So the option itself it's not like a stock where the stock IPO'd, let's say 10 years ago, and it just continues on, and just continues on. The options are they get listed, and then they'll expire, and then there are new options that are listed, right? Completely brand new options that will be listed to replace the expiring ones and so forth. So when we're looking at options, they're continuously, new ones are listed, expired, and new ones are listed again, right? They have a expiration, right? They have a lifetime, they have an expiration, then we get new options. So this option here, we could only track from the time it was initially listed, and then it'll expire, and then it's gone, then there are new ones. So this particular expiration, we could see, that it was listed over here around December 21st, I'm hovering over. And it started out, at the end of that day around 12.7. And we see here that, that it came in, then came up, then came down, then came up, then came down, then came. So it could definitely bounce around, right? It doesn't look like it. It could be volatile. The volatility of the vol it could be volatile. And it looks like it's been even below 11. 10.4. So I was 10.4. And that, and just looking at that, right? Just looking at it now, we kind of get a sense of how implied volatility behaves in SPY. How that it could be volatile, it could be, it could go up, and then it could go down, it could go up, it could go down, and it could bounce around, certain levels quite a bit. So that would be, by clicking on that at the money IV, that's kind of good. And just looking at it, what started out December 21st, so this would have been more than a monthly, right? February 2nd. So let's go now to the next. If there are no questions, I'll just keep moving on to the next data.
Hey, D, we did have a question that popped up with Ivan.
Yeah.
A little off topic. He was saying he looks at the pre-market. Let me get directly to the question. He was saying, hi, Dimitri. Notice that the open interest numbers changed slightly, I guess, 5 to 3 hours before the market opened. The same time, open interest analysis dashboard data changes. Why does this happen?
Wait, can you read that again?
Hi, Dimitri. I noticed that the open interest numbers, OI numbers, changed slightly to 5, 3, or 3 hours before the market opens. At the same time, the option open interest analysis dashboard data changes. Why does this happen?
I'm not sure I understand that, but maybe if you could show me like examples or a screenshot. I'm not, I'm not sure I understand it's not based on some kind of analytic or data you're looking. It seems to me you've witnessed some kind of a behavior in data updates, but if you could screenshot or show me, then I'll take a look at it.
The
But
open
I'm not.
interest does adjust overnight, right? That does, those numbers change overnight.
Yeah, so yeah, let me go to the open interest. Um,
Ivan, you can send a screenshot of what you're talking about and a description maybe to support at MarketChameleon.com, and I'll put that in the chat, and we'll look at it as well.
yeah, so yeah, I'm not sure exactly. I have to see the data points. But when we talk about here's an open interest report, right? And we have, these are the individual options. The calls are over here, the puts are over here. So we could see here February 16th, 495 call. This is the open interest, 92,311. And what it did was it increased by 512 from the previous day. So the way open interest is calculated is that when you have trades throughout the day, you have volume, buys and sells, and you have all this volume that's going, and some of it could be round trips. Some people could be buying and selling and closing the same day. Some people could be transferring positions from one person. It could be not, even though there's volume, it doesn't create new open interest because it's just kind of like somebody, you know, who owns it just sells it to somebody else who now owns it. So so the way the open interest works is that at the end of the day, you have all this trading, and the Options Clearing Corporation, the OCC, you can go to their website. They clear all options, right? That's the guarantor of options, the Options Clearing Corporation. They take the end of day settled trades. Then they also take any, early early exercise assignment that's taking place in any kind of like splits or anything that's happening. They take all that and then they reconcile overnight and come up with the open interest. And then the next day we have available for the new open interest from the previous days. So open interest isn't like it's not like volume where every time there's a trade there's a new open interest being disseminated on the trade tape. So that doesn't happen this way. And quite frankly, the volume and the trades are coming from the exchanges, right? So there are whatever 16 different exchanges. Could be SIBO, Amex, Philadelphia Stock Exchange, NASDAQ, all these different exchanges. But the exchanges themselves are disseminating what's happening on only their exchange, right? So they don't know the open interest themselves because they only have the data that they could disseminate, which are the trades and the quotes. So now you have all these trades and volumes, and then at the end, and then once the trading stops, right, then there's a settlement process, and once the trades settle, based on the settled trades, the OCC then takes over, and then it'll take into consideration maybe early exit. Some people might have traded something and then exercised it, right? Well, if you do that, then the open interest goes away because the option just gets converted to stock and it goes away. So that happens in an overnight process, and then the next day, the OCC makes the new open interest numbers available, and then we get it from our vendor, right? So once we start getting it from our vendor, the open interest, we will start populating it in. We do wait. So from our experience, the open interest is not, how can I say, it's a little bit shaky from what they give. There's a lot of corrections and stuff. Like we've seen open interest that gets corrected the next day, 2 days, or even 3 days after, because there are lots of errors going on there that we cannot. It's not. We could only show what we're getting, right? So we're receiving this data, and we're like, okay, this is the data points that we're getting. And then we look at it, and sometimes it doesn't make sense. We'll even go look at the OCC website, and we're like, yeah, that is the data being disseminated. It doesn't make sense, but we'll see corrections the following day and so forth. But we can't control that, right? So remember, we don't make up this data, the open interest, that those numbers themselves, the raw numbers. We could control our analytics calculations on the raw numbers, but the raw numbers themselves are coming from those official sources. And I mean, I don't have enough time, I would show you, but I know every day there's issues with this open interest that you might be spotting, but we already know about it. That's why. And we've actually emailed OCC. We've showed them some of the errors. Gave them documentation on, but we haven't gotten responses from them. But the way it works is, yeah, we get it in the morning. Sometimes we wait closer, I think, like maybe till 7 or 8 a.m. And that's also from experience where we saw changes. Sometimes we'll get something at 5 a.m. and then we're like, well, the file from 5 a.m. looks different from 7 a.m. The OCC gives more data. So we wait because we don't want to put something in that we know that there might be a good chance it's going to look different anyway at 7, or so we do delay it, and we look at the file and say, from our experience, that we're going to get a new file, right? We're going to get an updated file. So we wait till basically that's the final file that we've received from our vendor. Then we start updating it. So we don't want to keep updating again and again before we get to the right answers. But we're right up at 9:30. Well, maybe we'll talk about open interest tomorrow.
Yeah, that's perfect, D. Send us that question if this didn't help, Ivan. If there's more to your question with any screenshots, that'd be great. Yep. Awesome job, Demon.
All right.
Everyone have a great day.
Thanks, everyone, for joining. Stay safe out there. Have a great day. Hope to see you guys tomorrow.
Trade in peace, communities. Everyone have a great day.